what, according to you, are the top takeaways from the Fed minutes?
No, I mean, I think we highlighted it quite succinctly, Alex, just about 5 minutes ago, that it is more hawkish than what the street would have anticipated, but everything is on the table. I think Tamanna put it up very well, that they have said that we will do whatever we think is required, and all the options are on the table.
Okay, and the other thing, of course, is pushing back on expectations that cuts will happen around March. There's no indication of a time. We knew that, of course, but then a lot of people are now pushing it further behind. And there was a lot of volatility, Samina, in the bond yields overnight. It touched 4% on the 10-year. Yeah. It's down back to 3.92%. The question is, do we see a bit of a pullback in the bond markets and therefore a little bit of softness in the equity markets in the near term?
I think it's a very fair point, and one thing that we should mention today is, while you've had those Fed minutes, the bigger cue will come in tomorrow when you've got your non-farm payroll data, right? That is not expected to disappoint the markets, which may not be great for the bulls. So just substantiating what we saw in the Fed minutes, which said that the rate cut may come a little later. And this is what I'm very confused about. Nobody said there was going to be a rate cut in March, and nobody now is saying there's no rate cut in March. Right? The bulls want to believe it, the bears want to believe it this morning, but I guess Peter will help us break this down.
Peter will help us break this down. In fact, let's bring Peter Maguire on as well. We've got Peter Maguire, the Chief Executive Officer of XM Australia, joining in. Peter, we're trying to parse the data that we have right now. What are you making of the latest with regard to the Fed minutes, of course, and the trajectory of bond yields and what it means for global equity markets?
Well, good morning, Alex, and greetings from Sydney, and Happy New Year to everyone. You've got it. Certainly, it's a pleasure to join you. Look, I'll tell you what, I think the market's a little bit, while they're hawkish, and I took on board Niraj's comments, I'm also, there's one of, when is the rate cuts going to actually get traction? And this is the thought. The investors and traders are saying there could be 150 basis points this year. Fed's saying 75, somewhere in the middle. And when do we see blast off? Is it by Easter? Is it going to be in March? So I think we've just got to get through this first month. I'm looking to see how NFP hits the market tomorrow night, non-farm payrolls, and a couple of other moving parts, where the dollar is, and let's see if anything happens as far as US equities over the next couple of weeks. So yeah, there's plenty of issues that we're going to take on board and really get an idea of where we see movement.
Peter, good morning to you. I believe it's still morning in Australia, but do you reckon that this is more a temporary shift in a sentiment which might last for a day or two, because the overarching theme or trajectory seems to be lower inflation, lower economy, and lower yields? Sure, the minutes could spur the yields higher for a day or two or three, but the overarching trend is still lower?
I think so, Niraj, and I think that's exactly right. You know, you'll get little bumps in the road, and let's see what happens over the 48 to 72-hour window. But yes, the overall theme, I mean, they're conscious as far as where inflation, it's certainly heading in the right direction. You've been also assisted globally with cheaper energy markets. So that's helped from a consumer standpoint. And then this has all got to feed into, naturally, I think, investors' appetite to take on risk. What's happening in this first month will be interesting, remembering we had that huge rally November and December. No one was going to sell because of the tax implications in April. So if they're going to sell this year, and that may be a little bit of profit taking, and people see other opportunities. So yeah, it's going to be a really nice run up. I think the first quarter will be quite dynamic, and so yeah, strap yourself in. It could be a lot of plenty of opportunity for traders.
Hi, Peter. It's Samina joining in as well. I want to move on to the dollar, because that has seen a very sharp gain as well over the last couple of days, close to levels of 102.5, maybe slightly higher. How do you trade the dollar right now? Do you think further gains are on the lines, with tension, of course, on the Red Sea, Fed rate cuts not coming as soon as the markets were expecting? How would you play the dollar? Would you consider going long at these levels?
Well, I think so, Samina. Lovely to see you. And I feel as though that push to the upside, you know, it's got a little bit further to run, because, as you just said, as far as Fed, let's see us, with the sell-off as far as some of the other currencies, there's been a nice really push on from a currency trading perspective over the last couple of days has been very, very strong. So, yes, I think possibly a 103. Let's see if there's any thought as 103.25. in the short run, maybe by, Tuesday next week, there's every chance it could crank that sort of number out. But yeah, it's been a dynamic market over the last couple of days, and it hasn't disappointed since Christmas as far as currency trading at all.
Absolutely. The last point that we want to talk to you about is crude oil prices, and we've seen that they've not gone up as much as one would expect in a normal situation when you have so much geopolitical tension. And overnight as well, a lot of headlines coming in, the Houthis attacking another container ship. You have the US and its allies talking about repercussions of that. What are you making of the moves in crude right now? Where are we heading?
Well, I tell you what, it's been very range-bound. Really, we haven't seen explosive moves. It's had a big move overnight, up a couple of percent. But look, it was pushed down. It's been whipsawing, and it's been very, very choppy. So that needs to be considered. You've got 78.60 for Brent. I'm just looking on my screen, 73.12 for WTI. So, yeah, look, it's been range-bound. I think the smart, when it went to US dollar, they pushed that up. Crude's taken a little bit of a backseat. I really would have thought that, something as far as the Houthi situation would have pushed crude higher. So it just goes to show that unless you see something dramatic happen in that Red Sea and that choke point around the Gulf of Aden, then maybe, we've just got to wait and see how it all plays. But look, there's every chance that will create, I think, further upside. But it just really depends on, geopolitically and whether they contain this or it runs out of control.
Much, Peter, for joining in, giving us that perspective. Always a pleasure speaking with you. Niraj, I think what I took mostly from this is that there may be a few bumps in the road, but that structural move is intact. And while you might see a spike now and then in the bond yields, they are heading lower.
Somehow, I think today's bigger news is not the Fed, but what's happening in the Red Sea.
Right.
Remember what happened with Evergrande and what that blockade did. Now, this is unpredictable. And if this,
flares up.
Flares up, thank you for filling that in for me. But if it flares up, then you never know what happens to costs, shipping rates at a point of time when the world economy is looking like coming off.
And we've maintained that is the jack in the pack. It is going to be crude, and crude has always played havoc. But also, Niraj, while I know this crisis is putting some pressure, there is still oversupply, and we're going into a seasonally weak quarter for demand. US is producing more than the world likes. Saudi wasn't happy about it.
Yeah.
Let's not forget what happened at the OPEC Plus meeting. There was resistance to cut production, and it all seems like I'm not saying one way or the other, but this is going as per script.
But Samina,
We're back at 80.
No, but crude notwithstanding, let's assume crude prices stay stable at here. Just the shipping cost moving up, independent of crude, could be the problem.
And 12% of maritime
where
trade, right?
Khalid Khan, who's the Federation of Exports, has said that cost of shipping, so shippers have been trying, logistic companies have been trying to hike prices, but because our supply from India has been low, they've been unable to do it. But now that this is a great opportunity, prices are up anywhere in the 80 to 100% range, and a $1,500 surcharge has been applied on every shipment now going to the Red Sea.
Yeah, so
we'll try and get some more on that, and what that
we
means
have
for Q4 earnings for exporters.
Yeah, most certainly. This is an important barometer, and somehow, I don't know, I may be wrong, but I just think that this is probably the bigger headline. The Fed is a passing thing. It's happened today. It'll probably impact for the next 2 days. Let's wait and see what happens next. But let's wrap it up on Editor's Cut for today. Please write to us if you believe that there is some stuff that we should talk about on this to give you our perspective. But this is it on the Editor's Cut for today.